Hi guys, welcome back. As you already know, buying options and hoping for a certain result in a company's earnings report is a surefire way to lose your money. That's because of the IV or implied volatility crush that you've probably already heard about. Today, I would like to go over a safer way to play earnings with options. This method usually risks only $100 to $200 and has a good chance of netting you at least a couple hundred or more. You just need to know what to look for. It's one strategy that I trade with a lot of confidence and it centers around earnings. I'm also happy to say that I started my new portfolio with 20,000 even. I'll use this portfolio to track trades discussed in this channel from now on. That way we can all see the progress and see the results and learn from them. It'll also be tracked on my Twitter account, which will be more up to date. In this video, I'll go over 4 recent trades, one of which is still open. But first, the standard disclaimer. As you already know, this channel is for informational and entertainment purposes only. No investment advice is being provided. Please do your own research before making any trades. So before I go on, I'll do a quick follow-up on the open trades from my last video. In that video, I sold or shorted puts on 2 SPAC stocks, FMCI and SHLL, which represent the businesses of Tattooed Chef and Hyliion, respectively. The share prices for a majority of the big name stocks, such as the FANG stocks and also the SPAC stocks, have gone up a lot the last 5 days or so needless to say these trades have been profitable. As discussed in the last video, I plan to hold the October puts until expiration. For the January expirations, I plan to hold until at least the end of October, which would be about several weeks after the mergers are completed for these 2 companies. Since these trades are, in my view, low risk, I entered into an additional short position on the 1750 October puts for FMCI. I have plenty of similar positions in my other portfolios, but wanted to have this in here as well, as it matches the goal of this portfolio, which is to make a good return while taking on limited risk. I'll go over these puts again, and definitely by the end of October at the latest. Okay, so now let's go over the option strategy that I use to take advantage of the upcoming earnings. I use something pretty simple. It's a straddle trade. I usually want to enter into these trades 1 or 2 weeks prior to the earnings date. As you probably know, a straddle is a buy of a call and a put at the same strike at the same expiration. You buy the straddle and hope to sell them later at a higher price. I usually buy the strike nearest the current trading price and with an expiration after the earnings date. I'm hoping for a significant price change in the days leading up to the earnings date. Significant changes in the share price will result in the straddle being worth more. The plan is always to sell prior to the earnings report. So let's go over the pros and cons of the strategy. For the positives, there's limited risk. The plan is always to sell before earnings. The earnings event will keep your premiums high, as the time decay won't have as much of an impact on the option premiums. What I also like about this strategy is that you don't have to watch the option prices during market hours. You can do it at a more convenient time, such as after work. For someone like me with a full-time job, that's very helpful. Lastly, you're not worried about market direction. With the market being at all-time highs, it's tough to say whether it'll continue going higher or if a significant pullback will occur. This strategy isn't reliant on you getting that right. Alright, I'm not sure if you would consider the following negatives, or there's simply something you should be aware of. For the first point, it requires homework. You need to spend the time to determine the right strikes and the correct prices to pay for these options. I also recommend you confirm the earnings date with the company's investor relations site instead of relying on a third-party source. I don't think of this as a negative, as you can do this work anytime, such as in the evening. A full-time job won't prevent you from doing the necessary level of work, and the work will give you the confidence to execute on this strategy. The second point is related to the first. You need to set a good limit order so that you can get a good price on the straddle. Your return will be highly dependent on the pricing, especially for options with less volume and liquidity. Sometimes I'll set a limit order in the morning, and if it isn't executed within 1 to 2 hours, I'll up my limit order by a little bit. I'll do this gradually. The price of the straddle will usually not fluctuate quickly so that you have time to get the best possible price. For your gains, I'm not expecting to double my total investment. In my mind, I'm only risking $100 to $300 on these trades, so my expectation is to make 100% on that. So I'm usually happy with that. I usually enter into 2 lots so that I can sell the first for $100 to $300 in profit and hope for more on the second lot. Lastly, it does require more buying power. As you will see, calls and puts near the current trading price and prior to earnings are expensive. It doesn't mean you're risking the whole amount since we're selling the options prior to earnings. It's just that it takes more buying power to enter the trade compared to potentially other option strategies. So here are the trades I made. Let me first say that a lot of stocks went up during the week, so this may not be the best example of a typical trade using the strategy. In fact, any videos that talk about their gains this past week should probably be taken with a grain of salt, as most of the popular stocks such as Tesla, Amazon, and Zoom went up a lot this week. Having said that, you'll see I opened Straddles for Zoom, ticker ZM, Workday, WDAY, and MongoDB, MDB. For all of these opening straddle trades, I closed each one within a couple of days, and for each, I made $200 to $400. As I said earlier, it was a friendly week. It's not usually this quick and easy. I'll show you one closing trade that gives me a little regret, which was my sale of Workday. I closed the straddle within 2 trading days for over $200 profit. However, if I just waited another 4 to 5 hours or so, I would have made another $1,000. I would advise and usually do enter into 2 lots, which I discussed earlier. This would have allowed me to sell one and keep the other for bigger profits. But I was just a little bit busier this week and saw a lot of trade opportunities out there, so it was kind of spread thin with time and trades. For the real money portfolio, I wasn't able to set it up until Tuesday, so I wasn't able to enter into any of these trades. I tried getting into a straddle on DocuSign options on Tuesday, but I couldn't get my limit price. I was, however, able to enter into a straddle for Lululemon, ticker LULU. Option pricing at the 380 strike appeared to be the cheapest, and due to high volume, the bid-ask were tighter, making it easier to get the price I wanted. As of Thursday, end of day, this position is still currently open in my portfolio. I'm hoping to close it for at least a $200 to $300 gain. The expiration is on September 11th, and the earnings date is on Tuesday, September 8th. So I have time, and I will close it a couple days before the earnings date. For subsequent videos, I do see some potentially exciting option plays that appear almost risk-free. They'll take a little more time to research, put together, and explain. One strategy involves shorting puts and using option spreads in combination. Also, there appears to be unique opportunities to capture a good risk-reward on iron condors and iron butterflies on stocks such as PTON, ticker PTON. I'll try my best to put videos out on this. But if you want to be more up to date on what I'm doing, you can follow my Twitter account as I'll post trades there as well. As always, I'll keep updating you all on the open positions discussed in this and prior videos. Well, thanks for joining me today. As always, if you have any questions, please let me know. Hopefully you enjoyed this video, and if you found it helpful and informative, please support me by hitting the like button and subscribe. Thank you.